Welcome to Good Money Guide. Today we're joined by Max Rofagha. He's the CEO and founder of Finimize. We're going to have a chat about the great wealth transfer, Finimize, what they do, and who they do it for. So, Max, thank you so much for joining us, and welcome to the Good Money Guide podcast.
Great to be here. Thanks for having me.
It's a pleasure. It's a pleasure. How are things since you have been taken over or integrated rather into Abrdn?
Things have been exciting. We know we've been working on a lot of new innovative propositions. On the one side, rolling out new B2B products. So working on ways how enterprises, financial institutions can license our content to better engage with their retail audiences. Been working on some really innovative new solutions in terms of how we can localize, translate, and regionalize our content. So we've been busy and just really focused on pursuing our mission of helping and empowering people to make smarter decisions with their money.
And has it been a big culture shock going from a relatively nimble startup where you can pretty much do what you want, as opposed to being part of Aberdeen, that's one of it's the UK's biggest asset manager. They've swept up a lot of brands recently. Has it been a big culture shock for you and the team?
I would say so. No, I mean, I think for one, we still operate fairly autonomously. And so we have our own decision-making processes. We have our own legal entity. We have our own way of doing business, etc. Our own hiring. But on the flip side, we're obviously part of a larger group, and so we do have certain compliance guidelines, etc. Points that we need to adhere to. But the great thing about that actually is that it helps us learn quite a lot about how big enterprises operate internally, which kind of stakeholders are involved and why. And that for us has been very helpful in this B2B sales cycle to really understand who do we need to involve at what point, what's going on behind the scenes. Oftentimes when you're a startup and you're dealing with a big corporate, you might not hear from them for a couple of weeks, and you'll think, oh, this is not really going in the right direction. But in reality, there's a lot of things that are happening behind the scenes, a lot of approvals that need to be received, and all of a sudden we see it from the inside and we understand better how some of our clients operate. So I would say it's been a good learning experience for us.
Great. And how's growth been at Finimize? Have you seen a big uptick since joining up, both on the retail investors and the B2B side of things?
So I think we've seen it specifically on the B2B side. We've seen a lot of growth. We are getting more and more B2B clients on board. We're getting larger B2B clients on board. It's really also exciting for us to start to partner up with some of the client that Abrdn has. And so, for example, we were in Asia last year, met with existing Abrdn clients, and were able to show the Finimize proposition and acquire new clients that way. And so that's kind of been our core focus, is how can we grow our B2B enterprise business.
I get some of the stuff from some of the brands you work with.
Oh, really? Okay.
How do you deal with, because obviously if you've got a lot of B2B customers, it's easy writing your newsletter, isn't it? But then if you've got lots of different B2B customers, do you tailor the content for each customer, or is it just a different version of the day's news? Because there's only so much happening in the world that people want to read about. So is it tailored or just a different version?
So it really depends on the client. So some clients, so we have two propositions or two solutions in the market. One is it's an out of the box API solution where a bank, an asset manager, a broker, whoever can just come to us. We give them an API key, and then it unlocks the entire Finimize content library, the Finimize content suite, and that is then taking exactly the content that our audience sees, and that they can publish that to their audience. The other one is, or the other solution is a custom content solution, where we do produce custom content for our clients. And so it's very much tailored to their needs. That can be anything from, working with a private bank, where obviously the need to tailor content is much higher, to working with a financial platform in Italy where we focus much more perhaps on Italian local news. And so it really depends on the client's needs. And then we have these two solutions that we can help serve our clients' needs with.
And can you give us some anecdotal results? Have you seen a nice uptick in engagement for brands that use your? Because I've listened to a few of your podcasts actually before about user engagement with your newsletters, and it's obviously very high. And when brands do this, they do it obviously to write tickets. So do you have any anecdotal stories you can tell us about brands that have done well, commercially out of the content you're generating for them?
Yeah, so I mean, we share a couple of case studies actually on our website, business.finimize.com, so people can read up on those. Maybe just to highlight a few anecdotes without giving necessarily the names of those firms. As you can imagine, there's confidentiality that we're bound to, but we're working with one of the main asset managers in Asia. Interestingly, their CEO was a Finimize user, reached out to us, and then said, "I would love to have your content within my own proposition." And we know from them anecdotally that whenever they send out a push notification to their audience, and it's Finimize push notifications, it has a 3 times higher engagement than any of their other push notifications. So that's one example. And another example might be that we've been working with a research department within a large financial institution, and they came to us and they said they wanted to modernize their content to really engage with the people who consume their research. And I think within 3 quarters we were able to 4x the net promoter score on the content that they put out. And so you can start to see results pretty quickly if you leverage some of the know-how and expertise that we've gathered over the last couple of years. We reach over 1 million people every day. We reach 40 million people a year through our enterprise clients, and we collect something like 5 billion data points a year on what works. And so what I'm trying to say with that is that we have a lot of data and a proprietary engine to really understand what resonates, what doesn't, and as a result can very quickly drive up engagement.
Okay, great. Well, look, we'll get on to the symmetry of information between institutional and modern investors in a minute, because I know that's what you want to talk about. And actually, it's a really good point. But a nice segue, I think, would be as a content business, Finimize is relatively light on content, and I mean that in quite a nice way. Like a lot of publishers nowadays, particularly on the analysis side, are just churning out content. Some are putting out hundreds of articles every day, but with Finimize, you just have you really just have the sort of one small article per day. Is that right? Am I right in thinking that, or do you
not quite
have another level where you
be so you're right on a high level in the sense that we don't churn out content. It's not for us. It's about quality over quantity. I think one of our clients once described it as we're the signal in the noise. But we produce something like 10 articles a day, which is highly curated by our team of analysts. And the whole point of this curation is, as you say, there is a lot of noise out there from everybody, because the reality is, why is there so much noise? Because people need to produce content to have more pages on their site to generate more advertising clicks. That's what it boils down to. We have a slightly different operating model, and for us, part of the core value proposition is that it is curated, that you never need to spend more than 5 minutes a day to really get the lowdown on what's been happening in financial markets.
Okay, great. And there is obviously a huge divide between what institutions have access to and
Yes.
what retail customers have access to. You've obviously got the Bloomberg terminal, which for anyone who has ever used it, it's like having a hand cut off when when you leave and they take it away from you. So what are your views on retail versus institutional research? What's Finimize doing to bridge that gap?
Yeah, so I mean, it really comes back to the origin story of Finimize, which is a very personal story because I went to go see a financial advisor back in the day at a bank. Very quickly realized, although she was a lovely lady and it was a very pleasant experience, very quickly realized that she was there to sell me her products, not to actually help me.
I had a very similar experience and it was awful. I remember when I was a kid going in to see someone at Lloyd's Bank in Fenchurch Street and them just flogging me some Scottish widows, rubbish. But anyway, sorry, carry on. It was and still is in many cases a terrible experience.
And I remember sitting there thinking, and she had this research report printed out in front of her, where they do their market forecasts, and here's why you should, they basically try to contextualize or justify, rationalize why you should be buying those products right now. And I remember just sitting there, thinking, I would love to just go into the room behind you and speak to the person who actually produced that research paper and just understand what their research has found, and to then go off and make my own decision, which is independent, unbiased, etc. And it made me realize the more that I started, because it really bugged me, and the more that I started to dig into it, it made me realize that there is this fundamental information asymmetry that exists between what the professional investors have access to and what the retail investors have access to in terms of information. And I've been working on internet products all of my career. I've never worked in a different space. And if there's one thing that we've learned, it's that information asymmetries are not sustainable in an age of the World Wide Web. They will be breaking down inevitably. You've seen this in the travel industry. Back in the day, you had to go see a travel agent to book a trip. Today, you just go to Expedia, Kayak, or whatever it is, whatever platform that you want. You don't need a travel agent. And the same thing, I was very, very much a believer that the same thing was going to happen when it came to financial information and financial advice. And so what I realized is that there's essentially, we define this internally as the three worlds, if you will, of financial information. The first world is highly sophisticated professional information, like the Bloomberg terminal, as you just mentioned, prohibitively expensive for the retail investor. Then the second world is free, very noisy information, which has led to the things like the GameStop phenomenon. If you think about your Reddits, your Twitters, etc., even going on Google and going on to a page that is highly optimized for SEO ranking because they monetize through affiliate links. So
I wonder who would do that. That would be.
So those are free information, and I'm not saying it's all bad. There are good things in there. It's probably 10% is good and 90% is not good. So you'll have to spend a lot of time, and you need to have the know-how to find out what is the good 10%. And so then we looked at, okay, so that's really it in terms of the information landscape. And so what we want to build is a third world. And in the third world, you can get access to high quality investing information at an affordable price point. And that's where Finimize is positioning in itself.
And how have you found subscriptions in general? I mean, it's a tough thing to balance, I think, charging customers for financial information. I mean, I ran a subscription business for an analysis subscription business for 5 years. I have to say, selling a subscription to a UK investor was probably the hardest part of the job. It was virtually impossible. So I'm very impressed that you've managed to get.
And why is that? What was the challenge there that you found?
So I think generally in the UK, the attitude to the internet is generally, if it's on the internet, it should be free. In the US, it's very different. They're very happy to pay for things. They're very happy to pay for subscriptions. I just think it's in their culture. But having dealt with all sorts of investors in the UK over a couple of decades, the UK market was certainly the hardest one to crack. And, I mean, from our calculations, we thought there were probably maybe 10,000 people in the UK max that would pay for subscription. Our subscription point was a little bit higher. I think it was about £800 a year, depending on what asset classes you took, and that went, that was 10 grand for a corporate subscription, which was just as tricky getting 10 grand out of a corporate as it was getting 100 grand out of a hedge fund. But the UK market, we found particularly difficult. What's the appeal of Finimize for UK investors? I suppose, what percentage of your audience is UK, and then what do you think the sort of magic sauce was for Finimize that got people to pay for summarizing the institutional news for a retail audience?
So a couple of points there. So the first point is we started off with a free product, which was our newsletter, and what we at the end of each email, we always ask for feedback. And as we were reading the feedback, the number one request was to have more content. That was across the board, always the feedback. And so that's really what got us to think about, okay, maybe we could build out a larger content library. We couldn't do that in a newsletter because the newsletter has limited size. So we need to build a new property to show this content. So that's why we built a mobile app. And then we said, okay, well, how do we monetize this? And then subscription was the obvious business model for this. So that's how this came to life. We already, I would say, had some proof points that people were liking our content. We had some proof points that people were hungry for more content. And then the second point I would say is people, when we look at the geography of our user base, very much to your point, the largest geography that we have is in the US because our content is global by design. And the way that global news in the finance world works is that it often is quite US centric because what happens in the US matters for the rest of the world.
Well, anybody ever cares about buying US stocks anyway nowadays.
Yeah, although we do get people asking, can we have more UK centric or more Asia centric news? And so that's something that we're working on. But so a large chunk of our user base is in the US. And then to your point, for sure, a lot of people then came to us when we looked at, why did someone cancel? And oftentimes the reason was, well, I think I can get this elsewhere for free, or I should be getting it for free. And so that's been a core guiding principle for our product development. How can we really make sure that you can't get this for free, that it is worth your money?
That's an interesting point, actually. Have you been scalped by AI yet? We see it, we see a lot of that premium financial analysis just being scalped and then rehashed on other sites. Have you come across that with Finimize yet?
No, we're actually we're building our own AI tools internally to help us cover more, to help us become more efficient, to help us get more into regions. Not AI produced, but just tools that can then help our analyst team to become more efficient. And I'm really excited about this because it just opens up so many new doors for us. But we haven't seen any scalping, as you said, of our content.
Scalping. Sorry, I meant scraping.
That was a very vivid description of.
Yeah, I'm getting my trading similes confused. So let's just sort of break down the Finimize methodology for how you convert, the plethora of institutional information out there and condense it and make it easy for retail customers to read.
Yeah, so I mean, I think the first point is that we don't necessarily view our content as just summarizing what the institutional world is saying. It certainly plays into it, but we hired a whole team of analysts, and the reason why we hired them as opposed to journalists is that we needed the team to be able to truly understand what drives financial markets across asset classes, across geographies, And we needed them to add value by adding their own analysis and their own insights. So one of the key reasons that people who do like our content like it is because of the insights and the takeaways that our analysts give. And so we have this team of analysts. It tends to be ex-equity research analysts, and they often join us because they understand that this is the if you could start an equity research team from scratch, this is probably how you would do it. It's very close to the user, very data driven, and not writing reports that in the end of the day, very few people actually read. And it gives them also intellectually a much broader horizon because we don't box them into certain themes, asset class, whatever. They can write about whatever they think is relevant. So that's the curation part there. That's really where the substance comes from. Then the second part is we have a team of editors. I actually was the very first editor at Finimize. So we take the content from the analysts and then we make sure that it's fun to read, it's enjoyable, it's clear what are the key messages, it's quick to read, and it follows the format of an article that got Finimize successful.
I remember your first app actually when it first came out. It was brilliant. It was like a text conversation.
Oh
Do you
wow,
remember
yeah.
that?
That
I
was
remember
way back in the
I
day.
downloaded it and I was like, crikey, that's new. It was very good. Um it was
Yeah, it's funny how that all goes full circle. Now the chatbots are back with
it's gonna
AI.
come back. Yes, it's gonna come back.
Yeah, wow. So you were really early because that was literally the very first version of our app, which then we decided wasn't the most efficient user interface to communicate information, but was
Oh,
fun to play with.
it was a great hook though. Like, I mean, what a way to get noticed though. Like, you know, you basically see it with every app you download nowadays, don't you? You know, you get put through a little quiz. You know, I mean, we have a little quiz as well, and I think that interaction is really is really engaging. You know,
Yeah.
particularly now where there's so much static content out there. I think, you know, once you get a user clicking on a button or, you know, or getting a direct reaction, uh I think it's really important. And actually, Finimize is in one way, it's going to become more relevant than ever, or uh, curated content rather, because of the wealth transfer that
Hmm.
you know that we're also going to talk about as well. You know,
Hmm.
there's lots of old people sitting on a huge amount of wealth, and if the government doesn't take it all through inheritance tax, it's going to get passed down one way or another. So what impact do you think is this going to have on the investment landscape? Do you think people need guidance on where to invest it?
Yeah, I mean, I think the whole transfer of wealth is obviously something that will have an enormous impact on the entire industry. When we ran the numbers, we estimate that something like $84 trillion dollars over the next 2 decades will be handed down from the baby boomer generation to the millennial generation, and that the millennial generation by 2030 will have more than half of the wealth around the world. And then you look at who's managing that money today, a lot of the financial advisory firms. And the research that we've done very much found the same things that a whole range of other consulting firms or banks have found, which is that somewhere it tends to be within the range of 70 to 90% of the millennials who receive this inheritance do not plan to stay with the same financial advisor that their parents had.
I think that's a very good idea. I think every single person's parents' financial advisor is charging them far more than they should be.
Yes. And so if that is the case, then the question is, what do they want to do, if anything, about how to maintain or retain rather those clients. And so I think we're going to see a lot of change that is going to be required to handle and accommodate this new client segment that, like I said, by 2030 will own half the wealth in the world.
So what's a millennial? We're basically millennials. How old are you?
Yeah, I'm 36.
Okay, I'm 44, so maybe I'm not. I mean, I don't know about you,
I
but
think, yeah, you might still be a millennial. I'm not sure.
yeah, I'm getting to that point in my life where the only time I see my friends from school is when our parents die. That's
Okay.
it's quite sad. But having said that, though, I think I don't think I'll get any money from my parents until I'm 65, 70, maybe. I think that's one of the things about the wealth transfer. I don't think it's going to happen for quite as early as everybody
Yeah.
thinks. I think a lot of this the big money from these massive boomer property sales, as it were, is going to filter its way down when people are really in the later stages of their lives.
Yes, could be, could be.
And I think with that, I think will that money be invested, or will it be saved? The older you get, the less risk you should take. It'd be great if loads of money was passed down, when people are in their 20s and early 30s, and then they can invest because they should be taking risk because
Mhm.
they've got access to time. The wealth transfer, the longer it takes, the less people I think will invest. I think they'll you know end up in savings products rather than investment products.
Well, I guess the question is the velocity at which this is happening. I think it's actually happening already. Point one, point two is even if it were the millennial being perhaps in their older age already, at some stage they're going to pass it down to the next generation, which has even different requirements and preferences when it comes to managing their money. So the problem isn't going to go away. And so the question will be which advice firms will adapt, which advice firms will reinvent themselves to cater to this new audience.
Okay. And do you cover? I mean, I suppose, can you cover advice firms? You used to do a bit of brokerage comparison, but you don't you don't do it so much. Will you have a sort of advisory section on
So
Finimize for direct advice or guidance?
no, but what we do, so we don't offer advice directly to end clients, but what we do in order to help some of these advisory firms position themselves and reinvent themselves to cater to this new audience is we provide content solutions for them, and then they can use our content to engage their clients either today, or perhaps they might use us as a way to engage the children of their existing clients in order to sort of preempt that transfer and already start building relationships. So that's one of the things that we're finding is working incredibly well for these kind of firms who want to position themselves in a positive manner, is to start building that relationship early on. That's
Okay.
incredibly important. And so that's where we have an advisory hub. And advice firms can get access to that if they pay for a license with us.
And when this wealth transfer does start happening, and these younger people all of a sudden have access to all of the money, do you have a book you can recommend that you think can get people on the right track with their investing? Is there a book that's helped you over the years?
There's not necessarily one book that I would recommend. There is a style of investing that perhaps you only appreciate the older that you get, which is the Warren Buffett style of value investing. It's no endorsement or from our company. It's just my personal interest is this idea of when you're buying a stock, you're not just buying a financial instrument, you're actually buying a part of the business.
Yeah.
And if you make that mental change in your head, then you also don't have this expectations that you're going to get rich tomorrow. I think the Warren Buffett once said, everybody wants to get rich fast. I'm willing to get rich slow, and obviously he proved that his approach works and is the right one. And there's a whole range of books around, obviously, if The Intelligent Investor, which I probably wouldn't recommend because that's pretty heavy reading. But there's a whole range of books around this value investing, which I think is worth reading early on, because I do think it takes away this sort of frenzic, hectic day-to-day view of investing and puts it through a different lens of more long-term value creation and patient investing. And then at the end of the day, everybody needs to decide what is their style. But I do think it's important that everybody understands what are the different styles available to then make an informed decision.
And what about your investing? Do you have any memorable investments? Do you remember your best and worst investments?
I would say that I invested into so I don't really do stock picking very much. So I try to have this long-term investment in funds, ETFs, etc. But I did buy Amazon stock years ago. So my previous company was uh, was an e-commerce business, and as I was building the business, I really understood, man, this is very, very difficult to crack. And I started to look at Amazon and how they're operating and all the power that they have through the operational efficiencies that they've been able to build up, and just got a lot of appreciation for their business and for their business model. And so bought that stock, like I said, years ago. And I haven't sold it, and that's been doing very well.
It's a great investment philosophy is buy into the brands you use. A lot of people talk about it. Actually, quite a few of the CEOs we talk to say, buy the things you love. And
You know what's funny?
buy
I
the
was
brands
actually
you
thinking,
like.
I was thinking about this for some reason. It popped into my head this morning. I actually am not sure if that's such a good advice, but if that's such good advice, because you might like a brand, you might use a brand, but that doesn't mean that it's a good business. You can think of, WeWork is a good example. People might have loved WeWork, didn't turn out to be a good business. So
Well, I think I think probably what's meant by that is the brands you follow, the brands you love, you will probably know a lot more about
yes,
brands you
but it
don't.
doesn't necessarily mean that they're a good investment just because you use them. Is my caution there.
Yeah, I think that's a fair point, particularly when they seem to be giving things away. So you're mainly invested in funds and ETFs at the moment.
Yes, correct. I think I try to not get distracted too much by individual companies.
Okay, great. And final question: do you have any tips for investors? Of course, with the exception of taking out a Finimize subscription, do you have any tips for investors that you think can help them make more of their money?
Well,
It's a long pause.
that's a difficult question. I think it comes back to this point of how someone like Warren Buffett invests. And the point there is that he doesn't do day trading. And at the same time, you have a lot of propositions in the market that try to lure you in to do day trading or to, buy the stock and sell it in a year. And everybody feels smart when they're doing it, and maybe they got lucky. There's the founder. I read an interview once with the founder of Apollo, obviously a huge fund based in the US, who said to his team, you guys have been working for me for 10 years, and I still don't know if you're a good investor or not. And the point being that there's a lot of luck involved, and you need to go through these cycles to truly understand whether you're a good investor or not. And so what it means is you have to just be patient capital and long-term capital, and you have to do your research on these firms. And the one thing that I would say, whenever there has been a bad investment, it's when it's too good to be true. When it's too good to
Yeah.
be true, there's usually something wrong. You've seen it in the crypto world. That should always be a red flag when it's too good to be true.
Okay. Excellent. Well, Max, thank you so much for talking to us. There's a lot of good insight there for people to listen to. If people want to get in touch with Finimize for either a B2B or a or to follow your analysis, what's the best way for them to do it?
You can go on to www.finimize.com, Finimize with a Z, or you can reach out to me, max@finimize.com. And we're obviously also on all of the social platforms. And if you're interested in our B2B solutions, you can go to finimize.com/business.
Max, well, thanks so much for talking to us.
Thank you.